Hi, everyone. Thank you all for attending today, and I'm excited to share the details of our affiliate program with you all. We have always taken a keen interest in working with payment processing professionals, as I think we share a similar mindset about the correct target markets to position our offerings to. We're also very passionate about helping small and medium-sized businesses all over the country access the working capital they need in order to grow, and we view that mission as more important now than ever. To get started, I wanted to share a little bit about Mulligan Funding and myself. As a company, we have been helping businesses get access to the funding they need since 2008. As a family-owned business, this gives us a great deal of flexibility that some of our competitors have a hard time matching. While we love technology and try to leverage it as much as possible where appropriate, we are even more dedicated to full transparency and having a dedicated loan advisor to each and every account. This helps us build a real relationship with the merchant, and we recognize that the desire to access funding is often one of the major decisions that a small business owner can make, and we want to help guide them through that process. We think that delivers a distinct advantage to our merchants and our referral partners when compared to an industry that is migrating towards more impersonal and more automated experiences. For me, my name is Jason Fleming, and as the EVP of Business Development, it's really my job to develop relationships with folks like you on this call. I've been in the alternative lending industry for about a decade now and have seen its evolution up close. I wanted to give you all a quick overview of where we view the market right now. Obviously, the last 12 months have been extremely challenging, and our industry in particular and the broader funding market in general has not been immune. We have seen some of our most well-financed and largest direct competitors have to severely curtail lending, sell themselves to larger companies due to COVID-related portfolio losses, or go out of business altogether. Some sources, like large traditional banks, may be challenged to provide the types of small dollar loans to small businesses to help them hire and expand as the economy continues to open back up. Mulligan Funding has certainly taken its lumps due to COVID, but we feel we are in a very strong position now and into the future because we are not in the business of approving loans that put a dangerous strain on the merchant. And if we don't feel a loan is appropriate or a particular loan structure will benefit the merchant, we won't approve the loan. This approach to underwriting has allowed us to get back to normal before many of our competitors and will help ensure we are here for the long haul. So what does this mean for your clients and prospects? Well, typically the most creditworthy applicants are the ones who can rely on banks for funding. So this leaves a hole in the market for businesses who may not qualify for a loan with their bank. Generally, most merchants who need or are considering funding are going to consider one of three options: brokers, marketplaces, and working directly with lenders. Brokers are typically companies or agents that source leads and send them to providers of funding like Mulligan. We use brokers and will continue to do so. But it would be important to know that most brokers or ISOs often orient their entire business model around finding merchants who are looking to borrow. As a result, rather than driving savings and transparency to the merchant, some brokers tend to try and sell the loan offer that will maximize their gains. This is understandable because they have their own income to look out for and generally lack for a source of residual income, like a large merchant processing book, to provide stability. Unfortunately, this means that the merchant may end up paying more than they would otherwise need to, or the sale could be lost altogether. A marketplace is a platform that many lenders plug into in order to compete for business. Mulligan Funding participates in some of these marketplaces and will continue to do so. But somewhat similarly to the broker, the marketplace companies have their own profit and loss statements to defend. They also control the sales process and what offers the merchant ultimately sees, which again means that the offer seen is the deal that is best for the marketplace and not the merchant. Finally, merchants will often do their own research and try to reach the funding partner directly. We certainly take new business this way and will continue to do so. One of the drawbacks there is that funding partners may have a high cost of customer acquisition in the space, and as a result, need to recoup those spent dollars. Moreover, salespeople are generally compensated based on the amount of marginal revenue they can put in the deal. Finally, going directly to the source of funds might put the merchant with a lender with unproven or shaky underwriting, which can jeopardize the residual potential. Just within the last 12 months, Mulligan Funding has seen our largest competitors in the space, companies like On Deck and Cabbage, who probably have funded many of your merchants in the past, have sold themselves for pennies on the dollar. Mulligan takes a human approach to underwriting and relies on a team of skilled in-house underwriters rather than algorithms, and we have been able to weather COVID better than many of our competitors. So if you're looking for a way to make more money and park your clients' funding needs with a stable and proven company, I think we're a perfect fit. So where do you fit in? At a basic level, we want to earn your merchant's business and we want to pay you for those introductions. You've already done the hard work of getting your foot in the door with types of companies we can help access funding. We also know that your clients and prospects are being called on all the time for every product and service under the sun, including payment processing and working capital. But you have a distinct advantage over anyone else that is currently soliciting their business by having an existing relationship. If you leverage that relationship by sliding our funding solution into your normal sales process, we think the effects will be: 1, you'll earn an income opportunity where you might have missed out. 2, your client will get a better deal by working with us and having a trusted advisor like you facilitate that introduction. 3, you can still focus on the business you are truly an expert at while we do the heavy lifting of the funding. And finally, you'll earn 3% commission on the funded dollar amount, and we also pay 3% on every top-up and renewal opportunity. Many merchants tend to borrow through us multiple times because they can use us to grow. We'll take care of the first deal and every time the merchant would like to borrow. Ultimately, what happens is you diversify your offerings and increase retention by providing a real value-added service. If you don't get into this area, chances are excellent that when your merchant does need funding, they will look elsewhere. If you work with Mulligan Funding, we see very little reason for that to happen. So, like anything else, our affiliate program is a numbers game. Let's do some simple math. If you were to send us 10 referrals in a month, we could assume that we could approve 5 of them and 5 might get declined. Of the 5 approvals, our closing ratio should be quite high, as we have very talented funding advisors who are among the best that I have seen. So let's say we fund 4 of them and 1 doesn't accept our offer. At an average funding size of $60,000 and a 3% commission, that would translate to an income of $7,200. Once the referral is sent over to us, we'll do the work from there in terms of qualifying the merchant, answering their questions, overcoming objections, and getting them through underwriting to funding, and we can keep you abreast of all of that. At an even more basic level, the more referrals we get, the higher the chances we have of generating approvals. Even over time, we will continuously circle back on the clients who do not fund for whatever reason and get them through the process as best as we can. And those commissions will belong to you no matter how long it takes to fund. For the folks on this call, hopefully this will sound pretty familiar to you, but one of the major benefits of our program is being able to benefit from long-term residual income. Just like the merchants that process with you tend to continue processing with you, merchants that access capital through Mulligan Funding tend to access capital multiple times. A very realistic projection of the 4 fundings we described earlier would be for that set of merchants to renew with us 8 additional times over the next 24 months. Assuming again a $60,000 average, that would mean an additional $14,400 over 2 years from the initial funding. The best part may be that we'll handle the renewal process for you and the merchant. We are fanatical about renewals and will prepare merchants prior to the renewal windows opening up and get them access to additional funds as soon as they are able to. You can see the appeal of this residual income a little bit more clearly on this slide. The dark blue represents commissions earned as a result of new business. The gray represents renewal commissions that are earned when the new deals come up for renewals. We'd love nothing more than to set up this type of mechanism with all of you so you can continue to focus on your payment processing business and see those residual checks come in without you having to lift a finger on the funding side. So I'd like to drill down into a bit more detail about the actual loan product being offered. We can provide you with a lot more information about overall funding guidelines once we talk to you individually. The minimum loan size is $10,000 and the maximum loan size is $1 million in a single transaction. I think one of the things that we really excel at are larger transactions. Most alternative lenders that lend to SMBs tend to cap out anywhere between $150,000 and $500,000. They have a hard time underwriting slightly larger and more complex businesses, and as a result, they tend to cap themselves at a lower dollar amount because they don't want to be exposed to credit risks they don't really understand. At Mulligan Funding, we offer access to loans with higher dollar amounts and aim to give businesses a longer runway to grow into. Terms are anywhere from 6 to 24 months in duration, so this is still short-term working capital, but compared to the rest of the industry, the terms we facilitate tend to be longer than average. Typically, rate factors range anywhere from 1.5 to 2.0% per month, and we do hope you take us up on this opportunity to speak with us individually, and we can drill down into more detail and answer any questions that you have. Again, we largely exist for the SMBs out there who cannot access the credit they need from a bank. So our risk appetite is far greater than the larger traditional banks, and we do deals that they do not have the risk tolerance or interest in doing. From a standpoint of speed, an approval can be generated within a matter of hours after the application has been submitted, and often funded as soon as the next business day after approval. Finally, these are cash out loans. The money goes straight into the merchant's bank account, and the funds can be really used for any business purpose. This gives the merchant the flexibility to dictate how to deploy the capital and to invest in multiple things simultaneously. Generally, clients that have this sort of working capital cushion are able to invest in growth strategies with more confidence because they know they have a stronger buffer. I wanted to touch quickly on a competing product that many of you are probably familiar with, and that's the merchant cash advance. The merchant cash advance was really one of the first alternative funding products designed for SMBs and historically has been a natural product offering for payment processing companies. These funders offer a lump sum of cash and are paid back by taking a fixed percentage of a merchant's daily credit card receivables. Mulligan Funding used to do MCAs, and it helped us learn a lot about how to understand some of the types of businesses that we lend to, but we pivoted to term loans fully several years ago for a variety of reasons. One, MCAs are designed for companies whose primary source of revenue is credit cards. Companies like restaurants and nail salons, very traditional brick and mortar. We love those industries and will continue to help them access funding. But MCAs often fall short in industries like B2B companies where there is lots of non-credit card revenue. We take into account the totality of the business's revenue. Two, MCAs have often been linked to payment processing companies because they're already handling the merchant's credit card revenue. What this often means, however, is that if a merchant gets an MCA, they often have to manipulate the way their existing processing works in order for the deposits to be batched out or lockboxed to the funder for repayment. Mulligan Funding is completely agnostic about who the merchant processes with, as we get paid back via ACH. Three, MCAs are technically not a loan. It's an advance on future receivables. Because of that, the regulations about who can sell them are lighter, and that often leads to a higher cost of capital for the merchant, as they are not bound by things like usury or interest rate caps. Mulligan Funding facilitates fundings that are structured as a true business loan, and providers of funding like us have to comply with all relevant lending laws and regulations. Many of these protections are put in place for the benefit of the merchant. Finally, MCAs tend to be lighter on the underwriting as the focus is on credit card receivables. Mulligan Funding gets a more holistic view of the business when underwriting, and that often means we can structure deals that are longer term, more cost effective, and higher in dollar amount than merchant cash advances. It also means we can serve a greater breadth of industries like B2B and professional services. Typically, those business models are not well served by merchant cash advances. Once we send this presentation over to you, you can get more information from the links in the slide about our industry and our approval windows. And as I mentioned earlier, we look forward to speaking with you as many of you individually as possible, and we do hope you take us up on the opportunity to learn more and onboard with us. We'll be providing you with a copy of the slide deck as well as links to our affiliate sign-up form and my calendar so you can book time with me individually to get all your questions answered. And on that note, I will open up the floor to any questions, so please fire